segment 6 of accident and sickness. So we're going to continue now by taking a look at business insurance. So just like individual insurance, we talked about group plans for accident and sickness. There are also business plans out there to help protect those who have their own businesses, so the plans that they can get that are targeted towards that purpose, right? So we'll be looking at those plans now. We'll start off with 2, and then in the next segment we'll look at 2 more plans where they're targeted towards business owners. All right, so the first plan we're going to be looking at, we're going to talk about 2 today in this segment. So the first plan that we're going to be looking at is called BOE, which stands for Business Overhead Expense Insurance. And just as the name states, this is a plan that is meant to cover all of the expenses that are associated with the business, right? And business expenses only. So if, for example, we have a business owner who is disabled, how is that business going to continue running? So they can get this insurance to help make sure that that is running smoothly. What is important to remember here is that if the owner is disabled, so let's say someone has a coffee shop which has 10 employees, running well, and then they get business overhead expense insurance, it's not going to cover the owner. So if the owner is disabled themselves, it won't cover them. So that's important to remember. And that means that if you have a question for exam purposes, the owner needs to have their own individual life accident and sickness insurance, right? So they would need to have something that would cover their own salary in case if anything happens. So it's covering business expenses only, does not cover the owner if they're disabled. There's a list of things in the book as well that tell us all of the things that are covered. You don't need to memorize everything, but just to quickly go over what are the things that are covered, because I have not covered here. What are the things that are covered by this insurance? So this would include things such as rent, heat, hydro, salaries of the employees, property taxes. If there is a vehicle under the business name and that's on lease, it would cover that as well. So all of that is going to be covered. What's important here is, and also for loan payment, it was not cover the interest, right? So that it will not cover, the capital portion. So that's important. So what's not covered is the capital portion of a loan. So if you took out a loan for the business, it will make payments on the interest only, not for the capital portion. It will not cover the salary of the owner. So they need to have their own separate insurance to cover themselves. And it will not cover the salaries of if you hire any relatives on your behalf, it will not cover their salary. Also, if you hire a replacement for the owner, it will not cover that salary. You do not need to memorize anything here, but you should have a general understanding that it is things that are related to business expenses, just as the name states. We can find this list very easily in the book, and it'll tell you exactly what's covered and what's not. But again, the more we understand, the less we have to search when we're in the middle of an exam, and the more time you save, right? All right, this is a reimbursement contract. What do we mean by that? So we mean it's a contract where the business owner would have to save all of their invoices, all of their bills, all of their receipts. They would send it to their insurance company, and the insurance company would reimburse them back. So it's not like how we talked about the extended healthcare plans that are there nowadays, where you have a card that tells you belong to this plan, and you use a card and it's a direct payment, right? So you're not taking the bills from the pharmacist and sending it to the insurance company. Used to be like that before, but nowadays a lot of them are where it's a direct payment. So insurance companies directly paying the pharmacy for whatever expenses are, if you're getting prescription drugs or whatever expenses have occurred. So this is different, where the employer has to pay everything themselves first. The business owner has to pay everything themselves first, save all their receipts and invoices and all of that, send it off to the insurance company, and then they're reimbursed, right? So that's what that means. The benefit period for these plans is generally 24 months, which means it's 2 years total, and carryover is allowed. What do we mean by carryover? Now, because it is a business insurance, they know that the expenses are going to be high. So unlike with individual disability, your benefit might be $2,000, $3,000, because that is meant to cover your personal expenses. With business insurance, with business overhead expense insurance, they know that you may have a couple of employees that you have to pay, you have rent, so they know that the cost is going to add up pretty quick. So if, for example, let's say it's $20,000 a month that your benefit you have, and you have that benefit for 2 years, what if for first 4 months or 5 months you only use $15,000 a month? So that extra 5, you're allowed to carry it over. So in the next month, either you can use 25, or you can just build up that 5 extra and use it at the end of the 24 months. So the idea is that you have a pool. So let's say you are going to be getting $250,000 in the entire, or $500,000 in the entire 2 years. You can use that up in 2 years. You can extend it over 3 years. So the amount stays the same, but you can just extend it or shorten it based on your needs, right? So carryover is allowed. Premiums are deductible. So that means you can show it as an expense and deduct it from your taxes. And because you're deducting it from your taxes, you have not paid tax on those premiums. So benefit is also taxable, right? So you're getting that, you're paying the tax on the other end. You can add riders here as well. So this can be added to help. You can have a return of premium rider. So remember, we talked about riders in a previous segment. You can add those on to customize the business overhead expense insurance based on the individual's needs. So that's something that can definitely help. All right. So this is business overhead expense insurance. We're going to switch over to the next business insurance now, which is business loan disability insurance. And this insurance, the purpose here, just as the name states, is to make loan payments, right? So this is not for someone who's looking to pay their rent, heat, hydro, employees, all that. This is if you have a loan that you need to make payments for and it's essential, then you can get this insurance. Now, how do you qualify? So you have to qualify. So in order to qualify the loan, whatever loan you've taken, it has to be essential to the business. So you have to show, excuse me, that the loan that you've taken is something that was absolutely needed for your business. And it has to be from a third party, not relatives or friends. It could be from a bank, it could be from a trust company, it could be from a credit union, but it cannot be from family and friends. So you cannot get this insurance if the loan you've taken is from a family or friend. It has to be from some sort of institution, right? So that's what they're trying to say. The premium here is not deductible and the benefit is not taxable. And also, in order to qualify for this, you have to show that your business has a history of generating profits for at least 3 years. So it doesn't sometimes get approved for someone who has a new business or someone who doesn't have a lot of profit to show in their business, because they do want to see that it's a profitable business, right? So there are those sort of requirements that you have to meet as well. All right, perfect. So these are the 2 that we're going to start with. We're going to continue on with other business products for accident and sickness in the next segment. So let's go on over once you're done.